Hi, everybody. My name's Adeo. I'm here to chat with you about any questions you have on venture capital, any questions you have on VC Lab, or any questions you have on Cohort 18, the upcoming program for the VC Lab Accelerator. Just by way of background, I've been around a long time in the venture capital world. I've been an entrepreneur first. Then I was a venture capitalist, and now I am a limited partner. So I've been through all the phases, all stages, and to some extent, I'm still an entrepreneur. I'm still investing, and I'm still, so I'm doing actually all three right now, being an entrepreneur, a venture investor, and an LP at the same time. So I'm a little bit ahead of many people in the journey and happy to share insights and knowledge gained. I also created something called the Safe Note. Many of you probably have used it if you've invested in companies. I wrote it with some attorneys at Wilson Sonsini to fix convertible debt. And some of the attorneys quit and went to go work for Y Combinator, and they asked if they could use the document. And I said, absolutely. The goal is to get it out, not to have pride of ownership. But of course, then they're like, we wrote it at Y Combinator. I'm like, well, technically you didn't write it, but sure, whatever, you know. Um, on top of that, I've created something called the FAST agreement, which is gives advisors equity in startups. That's downloaded like 25,000 times a month. And many other legal innovations, many other things. Some of you may have seen, we had a post go viral yesterday. We just announced something called the Start Fund that totally reimagines venture capital. You can create a new venture capital firm in less than a day with no money. And just to give you how dramatic this is, if you wanted to set up a venture capital firm today, you have to set up three entities, get bank accounts. They're very specialized entities. So you're talking, 50 to 150,000 in legal. That's upfront. Then you might take months. Sometimes the bank account alone can take 2 months or so. And beyond that, you need all sorts of advisors and back office professionals and all this stuff. So it's a very complicated process. So by working through first principles, we got everything down to one day and no upfront costs. And on top of that, because we're so efficient in how we did everything, you can accept limited partners for as little as $10,000 and in a commitment. And just to make things clear, and you can't take limited partners in normal venture capital funds for really under 50,000 and practically 100,000 because the costs to run that account are kind of pro rata, right? So every LP that comes in has thousands of dollars of administrative costs. And if their investment size is too low, there's no money to take from their investment and invest. So really 50,000 is the minimum. So anyway, it's a pretty big innovation that we did. It's called the Start Fund. If you go to, maybe you could put a link in the chat for everyone, Dominica, about where the Start Fund is. And so, yeah, we're just trying to make the world a better place by improving entrepreneurship all around the world and making sure entrepreneurs get funding. And so let's start with, I see some great questions in the Q&A already. Thumbs up, guys. We're going to be going over a lot of exciting things today. But let me just tell you a little bit about our why we're doing all this, and I'll talk a little bit about what we're doing and then go right into your questions. So, I had the fortune of starting two separate billion-dollar companies before the age of 30, and then went on and did a lot of things to give back to the world and help and do, like I was board of X Prize Foundation, things like that. And I realized that really entrepreneurs are the future of humanity. And as a very successful entrepreneur myself, I said, okay, let me help more entrepreneurs get started everywhere in the world. And I launched something called the Founder Institute. It operates accelerators in roughly 300 cities all around the world. And in many of the cities where we launched these accelerators, we were the first entrepreneurial program in the country, certainly in the city, often in the region. And now we've done this like everywhere, from Mongolia to Paris to, I mean, we were in Kabul for a while, pretty much everywhere. And what came out of that was pretty clear that because we were first in market in many places helping entrepreneurs, we also were first in market helping people launch funds because a lot of the people that launched the first funds in Singapore, the first funds in Mongolia, Namibia, blah, blah, these are all around the world. But back in the day were people who were leaders of the Founder Institute because they were the first people in the ecosystems. And now they're like, oh, I should become an investor. So they graduated and launched funds. And guess what happened when people, anyone, like, I'm going to ask a question. What do you think happened when funds were launched in cities and countries that didn't have funds before? Let's see if anyone can get the answer correct in the chat. What do you think happened? There were no venture capital funds. Then all of a sudden, one day, someone opened a venture capital fund. What happened? They started having more companies and more VC funds. Yep. Innovation and entrepreneurship increased. Yep. More innovation. Lots of startups cropped up. Yep. Nobody trusted them. No, that's not no. Keep in mind, they were the market leaders. So these were the people that were running the startup ecosystems, and then they launched funds. All right. Better human life, first mover. No, not well, yeah, maybe better. All right, I'll tell you, look, the first billion-dollar companies emerged. It was one to one. VC fund came in, billion-dollar companies came next. It was like VC fund, billion-dollar companies, right? So we'd come in with the accelerator and startups would start happening. Oftentimes then we would come in with a fund and billion-dollar startups started happening. And it was like, oh, wow, look at this. Like there is more innovation, like many of you said. There are more startups, like many of you said. But there were more bigger outcomes. And what we realized is that the lack of venture capital in these markets was a glass ceiling on the success of what startups could achieve. Because without professional capital, right, it's very difficult to unseat an incumbent. So I have a story about this. Like there was a company in a country where we were one of the early accelerators, and we also helped launch many of the VC firms in that country. And they were making an online insurance company that would get you an insurance card in a day in Latam. Now, that doesn't sound, you're like, well, I can get insurance instantly in America. Well, you couldn't get insurance in very quickly at all in Latam. Sometimes it would take a couple months because if you were in a town and so they built this whole thing where they could have a courier even come to you with an insurance card and get you insurance in a day. And then they raised venture capital and they became a billion-dollar company by doing something that many people in the West considered standard, which is getting insurance in a day. They brought that to Latam. They could scale it to show that it worked, but they couldn't get it to a billion-dollar company level. Venture capital came in, venture capital funded them. They got to a billion-dollar level. They actually disrupted a lot of the large incumbents in insurance. So why I bring this up is that's our why. We're bringing venture capital to the world so that great entrepreneurs no longer have a glass ceiling and they can really solve the problems that we're facing as humanity. Because many times the incumbents are creating these problems. They're making fast fashion with, you know, child labor in developing countries. Okay? That's not part of the solution. That's part of the problem, right? They're doing things in antiquated and inefficient ways and taking advantage of consumers, selling people bad products that make you sick. Uh, all these companies that are doing things the wrong way need to be disrupted and replaced by companies that are doing things in a, forward-looking, ethical, and correct way so that we stop harming the planet and really turn this world and turn our life into something that we can be proud of and leave our planet in better condition for our children than it was given to us by our parents. And I don't think our parents did a great job. Let's just be super clear. But I think they are starting to realize this. We are starting to realize this, and we're going to change it. And the way we're going to change it is that there are going to be visionary limited partners backing ethical investment managers, venture capitalists who fund entrepreneurs that are trying to change the world. Okay? Passionate LPs, ethical GPs, founders that are going to change the world. And so we're going to be in the middle, or we are in the middle. We are working with the ethical managers to help them fund the companies and to get the visionary LPs and bring all that money together to really change things at scale. And I would like to see 20% of human GDP going to solve these problems as soon as possible. And right now, there's a big percentage of human GDP sitting on the sidelines because of trade wars, because of political uncertainty, and many other reasons. And so this is an amazing time right at this moment to start an ethical firm that can capture all that money sitting on the sideline and start deploying it in things that matter. Now is that time. Okay? So that's our why. Now let's talk about our what. We are oh sorry, I just got a text from someone. An article came out. It's never been harder to start in venture capital, right? That this is an article right now. Um, I have to tangent on this. Everything you read about venture capital is wrong. Full stop. Most of the source of that stuff is PitchBook. Most PitchBook is literally considered the worst data provider possible. And yet all because they're the only data that gives stuff to the reporters because it's basically worthless, the reporters mostly write their articles on PitchBook data and it's just flagrantly wrong. So cohort 17, which was right before you guys, all right, so it's operating right now. Cohort 18 is about to start. Um, they raised the most money, okay, the most money of any cohort in history. Okay? That's the fact. All right? Now, let me pull this article up for you that someone just texted me. All right? It's never been harder to make it in venture capital. Okay? So let's see. It's never been harder to make it in venture capital. All right. That's a headline. Here's a fact. Cohort 17 has raised the most money of any program we've ever run. It's not larger than any other program we've ever run. It's not the largest. It's large, but it's not the largest. But it's raised the most money. Does that sound like it's never been harder to make it in venture capital? Never. It's never been harder. No. So just ignore all that. Ignore it's just a low there's trillions and trillions of dollars sitting on the sidelines right now looking to be allocated. And one of the single best places in the world to invest in times of uncertainty is in venture capital. So I don't understand how someone could, with a straight face, write, it's never been harder It's not easy. It's never been easy. It's not like, oh my God, it's all of a sudden. I mean, it's so hard to start a venture capital firm in general, right? So if they said it's super hard to start a venture capital firm, that would be a truism. But I can assure you it's not never been harder. I can tell you sometime that's definitely been harder than right now when the pandemic first started, because you used to have to pitch all LPs in face to face. And then when the pandemic happened, you couldn't pitch people face to face, but no one knew Zoom. So I assure you that when the pandemic started, it was definitely harder than right now to do a VC firm. So, don't let the world affect your judgment. Now is a fantastic time. Lots of money sitting on the sidelines, ready to be invested. Venture capital in these times of uncertainty have historically good returns. So now is the time to get started. And so let me tell you about the what and go into your question. So we run something called VC Lab, which is a completely free training program that launches about 60% of the venture capital firms that get launched every year worldwide. And just to give you a sense of scale, we definitely are weighted in the top quartile and top decile of that 60% because, looking at various data sources, many of which are wrong about what is top quartile and top decile, and knowing the performance of our portfolio funds, more than 10% of our portfolio funds are in the top decile, and more than 25% of our portfolio funds are in the top quartile. And again, the program's free, so it's not like when I say portfolio funds, we have some sort of economic interest in them. They're just alumni of our programs. And so, but we try to help them not just in the program, but after the program. And I'll talk briefly about that, get into your question. So the program's 14, 15 weeks, depending, and you'll be starting in cohort 18 over the summer. So there'll be some break weeks, so it might be a little bit longer. And we get you over the course of that 3.5 months to a position where either you close on capital or you're about to close on capital. So the average time right now to complete a first close is around 5 months. So when you start the program, pretty much everyone will complete a close in 5 months. Now we work with new and emerging managers. So sometimes emerging managers are starting their new fund, and we have a dedicated program for emerging managers in VC Lab called the Emerging Institute. But for new managers that have never done it before, don't know much about what they're doing, we get them to a close in about 5 months. That is ridiculously fast. Okay. The average time for a new manager to close on capital on a fund is 18 to 24 months. There's a lot of That's just because people do things out of order. They do incorrect things. They talk with lawyers prematurely. They make lots of like simple mistakes that waste time. And by going through the program, we show you all those things. We teach you how to make the best investments. We give you strategies to get in the top quartile and top decile. And if you follow the curriculum and you come to the sessions and you take it seriously, you will probably launch one of the better venture capital firms, full stop, for the period, right? And I can tell you right now that some of our alumni are probably going to be the seminal firms of the future. Um, I see some questions in the chat. I want to turn it over to some questions right now. There's a question in the chat, and then I'll go to the Q&A. Please put the questions in the Q&A because you can upvote questions in the Q&A, which makes it a little easier. But Brandon's asking views on launching a series of SPVs to start versus a blind fund. The series of SPVs does not work. It doesn't count towards track record. SPVs can't be rolled into a fund. And if you do an SPV, no LP will consider that investment track record like you're a manager of a fund. They'll consider it like investment track record if you're an angel. Um, so we created something called the Start Fund, which has basically characteristics. This is easy to set up as an SPV, but it's a multi-asset vehicle that you can invest in things blindly. So it's like a real VC fund and it counts to your track record. So don't do SPVs, guys. It's really a waste of your time. If you want to be a venture capitalist, do not start by doing SPVs. It's the equivalent of saying like, I want to learn to drive a car, so I'm going to learn to ride a motorbike. And it's like, I mean, a little. It's like you're on a road in a vehicle with wheels, but like a motorbike and a car, they both have an engine, right? But they're very, very different. So if you want to learn to drive a car, drive a car. If you want to learn to ride a motorbike, ride a motorbike. But SPVs and funds are like cars and motorbikes. They're not the same. There's similarities, but they're very, very different. All right, so let's go over the questions in the Q&A. Thanks, guys, for so many questions. Kareem's asking, what's the visibility confidence for participants? My partner in my fund, currently at a fund, doesn't want to. Oh, yeah. So he's basically asking, do you get any publicity? No, guys, you can't talk about anything you're doing publicly. So let's start with something. So you have to publicly agree to the Mensarius Oath. That you have to do that to get in. We're not going to work with people that don't agree with our vision and values. We're doing this for free to make the world a better place because we care. And you have to agree with our values, and you have to agree with our values publicly. Now, our values are not shocking. If you don't agree with our values, maybe there's something wrong with you. But I'm not saying you have to, but you have to agree to them to work with us, especially if we're committing tons of time to help you. But you can't talk about your fund publicly. There's laws against it almost everywhere in the world. So you can't go out and say, hey, I'm raising a venture capital fund. That's illegal. Okay. In Europe, you will go to jail. And there are people going to jail for doing exactly that. So you can't talk about your firm. You can't talk about your fund publicly. Okay. Can't talk about firm. Can't talk about fund publicly. Now, if you have someone that's working at another fund, they're have serious fiduciary duties if they're helping you. So they have to figure out what they want to do with their life before they can come work with you. And you can talk with them, but you really shouldn't be engaging too much, and they shouldn't be doing work for you until they quit that other fund. Uh, so hopefully that's helpful. But I mean, I hope you guys can understand that, like, if I'm working at another fund looking at deals and I'm moonlighting with another fund, that's really some difficult ethical issues. Okay, so upvote questions that you like. Peter's asking, what does it mean to be on the waiting list for cohort 18? Um, yeah, so the waiting list will get worked through over the next roughly 3 weeks. It just means we have a lot of candidates. So basically what happens is there's candidates that are a hard yes, and we start an admission interview with them right away. Then there are candidates that are like, okay, interesting, we'll get back to you. And then some candidates are a no, right? So if you're in the waiting list, it's like, interesting, we'll get back to you. One of the best things you can do if you're on the waiting list is take some time to improve your application while we're getting through the quick yeses that we're getting scheduling. We have 17 admissions interviews scheduled for today, as an example. So we can host a number of admission interviews, but that's actually the record number of interviews we've had in one day. So we're busy with interviews, and if you're on the waiting list, use that time to polish up your application, because we're going to come back to it before admissions is done, and that's a great shot for you to have improved it and have better chances of being at the top of the list when we do the re-review. There's the questions here. I got accepted into the cohort and we have received many emails and invites. I want to understand which is the main tool, etc. Okay, so I'll walk through. You shouldn't have gotten too many emails. We are inviting you to things and getting you spooled up. So what we've done with cohort 18, which is a great question, is that we've let people who got in early to have early access to the curriculum, early access to the tools, and early access to the community. So let's talk about curriculum, tools, and community. The curriculum for the program is you'll be doing stuff each week to build your fund, right? It's fund building work. So it's things like figuring out how many investments you're going to make, if you're going to have follow-on reserves, your thesis, I mean, everything, right? You're going to data room, you're going to have an amazing, that's all in the curriculum. The curriculum is done on the FI portal. So you go to fi.co and log in. And if you've been enabled, you'll now see the curriculum when you log in to fi.co. They're a sister company, the Founder Institute, and we use their accelerator platform. It's very good. Um, and you fill in the work to build your fund there. And if God forbid you have to drop out for because you get busy or something happens, you can come back and resume the work in a future cohort. So you do your work in the fi.co Founder Institute portal. That's the curriculum. In terms of the tools, there's many tools, but the main tool is Decile Hub. When we used to run the program before we had a platform, we'd have to be like, go to DocuSign and then go to DocSend and then go to this thing and then go to that thing. It was like it's a super convoluted situation. Open a spreadsheet, then do this. And we're like, God, this is super complicated. So we built our own platform to build and run venture capital firms. It is used by about 15% of all operating venture capital firms worldwide, concentrated in new and emerging managers. Okay. The tool is excellent. About 1,000 and change firms use it every, frequently. In fact, we have a lot of data that says if you use it daily, you raise about 3.1 times more money than people who don't use it daily. We have lots of stats that using the CRM is actually really good for your firm and fund. So that is called Decile Hub. You were sent an invitation code for that as well. Last but not least, you were invited into the community. The main aspect of the community is something called Slack. Most of you probably use it, but if you don't, it's a great kind of community platform. There's about, I think about 1,200 managers on Slack and maybe 300 or 400 limited partners on Slack. And it's a very vibrant community with people sharing stuff. And so you should spend some time to navigate around. You'll meet managers from all around the world. You'll find friends there. You'll events are posted, and it's very, very. It's the most active Slack community I've ever seen. And we're always curating and making sure it's not so active that it's overwhelming, but active enough that it's engaging. So you should definitely use Slack. So those are the three things that you have the opportunity to have access to early, and that's what you should focus on: the curriculum, the tools, and the community. During the 3-month cohort 18 time, Gopan's asking, how much time do we have to dedicate to the program? Um, you're not doing homework, by the way. You asked about homework. You're doing fund building work. We're not asking you to do things that you wouldn't need to do. You have to do like it's like if you want to build a fund, you got to do this stuff, and we map it out for you. And the weekly time commitment, I would say, is 25 hours. Um, and this is just what you need to do to build your fund. Now, it can go up to 40 hours, okay? And if you're closing a fund, it's going to take about 40 hours a week. But if especially if you're closing a traditional fund, but for most of it, because closing's just hard, right? But for most of the fund building activities up until closing, it's about 25 hours a week. Now, look, you could do less time, okay? But what happens if you do less time is you extend out the amount of time it takes to close the fund. So if you want to close in 9 months, you could spend like 15 hours a week. But here's what the problem is, okay? Closing a fund and building a fund is a momentum exercise, right? You're building momentum. You're like, I've now got all these LPs interested. I've got to corral them all into a closing. That takes time, right? So if you're doing it 15 hours a week, you're not going to get enough momentum to get to the close. So really what we found is 25 hours a week is the number that you as a manager need to commit to get momentum in a reasonable time. Otherwise, what will happen is 6 months, 9 months, 12 months at that lower level of activity, and you don't have momentum. So you can't close. So then 18 months, no momentum. And then finally, you're like, God, I got to really step it up. You increase your time commitment and then you close. So 25 hours is the number, and that's why. All right. In the pre-curriculum, Martin's asking, it says we need to get at least one commitment before the program starts. I'm a bit confused about the requirement. I don't think it says that actually. It says, I'm pretty sure it does it. You need to get a commitment by we have what's called a thesis review. And that's the official beginning. What we're doing is we're saying you can be accepted into the program, but really we're going to pick people who are in the actual cohort at the thesis review. It's a little bit different than we've done things before. We're testing it out because so many people don't pass the thesis review. About half the class don't pass the thesis review. So we're like, let's just officially, rather than have a huge dropout rate, let's just wait to the thesis review and officially only admit people then, right? Because like it's like clockwork, half the people drop out. And that's about the fourth week of the program is when the thesis review is. And so the ultimate test that your thesis is good is someone says they'll invest in it, right? Like, look, I can be there and say, I think this is a great thesis. Okay, who cares? Like, do you care? No. Does it going to influence the outcome of your future? No. What matters? That an LP is willing to give you money for your thesis. That's what matters. And so for a thesis review, we say, look, we may think it's the best thesis ever, but if no LP is willing to make a commitment to give you money, it's probably not a good thesis, right? So that's the test that you can actually find someone to back what you want to do. And you have, weeks, 6 weeks. I mean, if you tell your friends that you're launching a fund and nobody wants to back you, not good. Not very bad, right? So that's essentially the test. So you will need to get someone to back you in roughly 7 or 8 weeks from now, right? And if you don't think you can get someone to back you in 7 or 8 weeks, you shouldn't be starting a venture capital fund. Like, you know, you need lots of people to back you, not just one or two. Uh, so you'll probably need 50 to 100 people to back you. So you have to find the first one in that time frame. After a portfolio company's IPO, must the GP immediately divest the fund's equity, or can there be shares held? Look, that's a unusual question. First of all, there are not many IPOs happening right now, but I think there will be more. And if you are like almost nobody here is going to deal with this, right? And I'll tell you why. You're going to launch most likely a pre-seed or seed fund. You're going to be looking at a 14 plus year to IPO average. And so your fund will be long gone before any portfolio company IPOs. You're going to have an option when your fund life is up. You might want to sell whatever shares you have in a secondary, or you can hand the shares off to your LPs, or you might set up a vehicle to hold them. So lots of options of what to do. In terms of if you are so lucky that one of your portfolio companies goes public, which is just I would that's I mean you're like, look, if I get hit by a car, struck by lightning, thrown off a cliff, and start drowning, and I see my God, what should I do? It's like, oh, in that case, like there's a very unusual circumstance for anyone here. But if you are so lucky to have a IPO before your fund life is up, you have complete control over what you can do. You could sell the shares and distribute the cash. You could distribute the shares. You really have now, some of this is defined in your LPA, right? But at this point, since IPOs are so rare, most LPAs don't include language on what to do, but some do, so it might be defined by your LPA. But generally speaking, the manager has a lot of flexibility. Hmm to do whatever they think is best because you're a money manager on behalf of LPs. So you have the flexibility to do what you think is in the best interest of making the most money. Max is asking approximately how much do cohort participants end up paying in admin and back office fees to run their funds? So it really depends, guys. So we have this thing called a start fund, which has zero fund expenses, zero setup fees, and what happens? So that could be zero, right? It's and right now over half of cohort 17 have decided to do start funds, and not everyone's decided. So it might even be 70% of the cohort does start funds. We don't know, but right now it's over half. And then there are traditional funds. Now, traditional funds, I mean, that's a very tricky question. Um, we have a back office service offering that you can apply for, and that is fixed cost, which is unheard of in the market. So it's fixed to set up at 50 and fixed annual at 25. Okay, thousand. By the way, you don't pay these fees. These are called organizational and fund expenses. The LPs pay these fees. So Max, asking these questions is sort of also not, but it's like you care, but you also don't care because these are fees paid by your LPs as organizational expenses and fund expenses. Now, unfortunately, this is a racket because the GPs don't pay. The vendors are not the best. They're disingenuous, often very bad. So law firms will charge, in some cases, 150,000 to set things up. Then they'll charge per close. So that gets very expensive. Back office providers, if you go to top tier, they start at 50,000 a year. You can go to lower tier people like Carta, who has a very bad reputation. They charge about 25,000, which is similar to what we charge. Angelus is pretty good, but they're more expensive. So in terms of price quality, we're by far, at least what we do is by far the best, and it's like 50 flat and 25 flat. When you leave that, the prices go all over the map, mostly up. But again, the reason for that is you don't pay for it, the LPs do, so the vendors just take advantage of the situation. Um, Very excited for the session today. Thank you. What's your take on deep tech investments and how do you see India as an opportunity? There was a question also in the chat about India. Yeah, so we launched tons of funds in India. Guys, we launched 60% of all new funds worldwide. So we launch 60% of the funds in India. 60%, actually probably more of the funds. There's some places we're actually more. I think we're close. We're asymptotically approaching 100% of the funds in Chile, most of the funds in Africa. So there's some areas where we're more than 60%, and there's some areas where we're less than 60%, like the US, we're probably a little bit less than 60%. But worldwide, the average is 60%. So places like India, we're 60%. And back to the question. So, yeah, I mean, look, there's a deep tech revolution going on. I met with a deep tech founder from India the other day. India is a challenging market in many ways, but a very big growth market in many ways as well. And there's great engineering talent in India. So I think there's going to be a booming deep tech market in India. It just isn't there right now. And I think part of the reason for that is to separate the good engineers from the okay engineers. In India is very hard because there's a ton of engineers, but really, in order to do things like deep tech or very difficult companies, you need really good engineers, and that's a challenge to separate the good from the great or the good from the okay. But yeah, I'm bullish on India being able to figure this out, and because of the talent, become a player, a large player in deep tech. And deep tech really is the future. Um, okay. How much did cohort 17 raise? I don't know the number. It's uh I just know because I talk with the team all the day, all the time, and they're like, we broke a record. It's I don't know, maybe it's under 100 million. I'm pretty sure so far. But the program's only a couple months old. So keep in mind that like in 3 months from now, you will be where they are. And the fact that they've raised the most money is a good sign. But I don't know what the total is. It's under 100 million and over 50 million. But I don't know the exact number. Okay, so let's keep going. Uh, Hannah's asking, how do you get past the chicken and egg problem of first-time managers with no previous exits, IRR and MOIC? Plenty of completely other experience. Look, my daughter always says, I'm not gonna lie. And I'm like, so I'm not gonna lie. It's not gonna be easy. I hate that expression, by the way. I just thought it was kind of funny. Um, so it's not gonna be easy. But look, it's not gonna be easy for anyone here. Launching a fund is not easy. We're gonna make it the easiest it can be, right? I mean, it's not going to be easy. And if you don't have an investing track record, it will be harder than if you do have an investing track record. With that said, um, most people that we graduate do not necessarily have an investing track record. In fact, one of our best funds, right? I mean, it's hard to say, it's definitely a top fund, and we invested in it with our fund of funds. The woman running it didn't have an investing track record, and she's doing fabulous. She's definitely in the top 10%. She's got great deal flow. She's got a great head on her shoulders. So one of the things that we do is we have a whole deal team that helps managers look at deals and review deals and teach you how to do deals, venture deals, because venture deals are different than angel deals. So we'll help you. So, and there are lots of managers that launch without that track record. So, Hannah, you can do it. It's just going to be a bit harder, candidly, but it's doable. Okay. Max is asking, how big is the cohort? What kind of mentorship? So the cohorts are pretty big. I don't know how big cohort 18 will be. We're thinking of making it a little bit smaller. But they usually are 300 to 350 people, about 200 and something, 250 firms, give or take. Um, we don't let more than 350 in. That's our cap. Um, there's lots of we do group office hours. There's lots of opportunities to engage. I mean, it's a great program. It rates between an 83 and an 87 NPS every single time. It is the single best program in the world by uh, I think it might be one of the best accelerator programs in the world. And I've run a lot of accelerators. I've run thousands of accelerators a year. And so, or 1,000 accelerators a year. So, and thousands of accelerators over my lifetime. This is incredibly well run program. And you will get everything you need to succeed. Full stop. Now, if you want one-on-one help, we invite the top people into sub program we call Decile Raise, and then you get dedicated because we want to help the best. We want to give everyone a shot, but we want to double down on the best. And so the best people in the program get one-on-one help in a program called Decile Raise. And they have a dedicated Slack channel, a dedicated person, weekly office hours. If you're a kick-ass manager, we will stop at nothing to see you succeed. Okay. Or at least we'll try to. You can still fail. Why can't the start fund accept LPs from Europe? So it has nothing to do with the start fund. You uh, pretty much nobody here can really take LPs from Europe. It's you. It's Europe is hostile to venture capital. And look, we launched lots of funds in Europe, but it's 5 times more complicated and 5 times more expensive. Um, I might even add like it's definitely 5 times more expensive. It's probably infinitely more complicated, but like call it if it's 5 times more expensive, it's probably 5 times more complicated in terms of the effort needed to get all that in. But if you actually look at it, it's just way more than 5 times because you have to get a license. Each country gives a different process to get the license. The license takes no less than 6 months, and certainly in many places it takes a year or more. Um, the processes are time consuming and expensive, right? So it's like it's just Europe. So the reason we don't take LPs from Europe is because there's so many rules and regulations that are impossible to comply with that it's just not practical to accept LPs from Europe into a start fund. Like, there's not enough time in the day to go through all the regulations and costs and headaches and to take a check from Europe. It's like, you know, like climb the mountain and now, like swing across the flaming ravine. It's like, and now, go through the jungle naked. And now it's like, come on, guys. Like, I just want to start a fund. No, no. Now you need to get another license. It's like, I don't want another license. I just want to start a fund. You need an office. I don't want an office. I want to start a fund. You need a director. I don't need a director. I want to start a fund. It's like endless. All right. Pablo's asking, what's the median investment of the first closing after 5 months? Um, the minimum that you can close on is 1 million, practically for a traditional fund. A start fund can close on any amount. So traditional funds, you really can't get operational with less than 1 million in your first close. So, a lot of people therefore close at 1 million. A bunch of people close at more. So I don't know exactly what the mean and median is. It's somewhere like in the 1.4, 1.5 range. Because as I said, a lot of people just get to 1 million, close, and start operating. And then some people will just say, no, I want to raise more. And so the number of people who raise more is relatively small. Most people just get to 1 million and get going. How many fund managers do you take in a cohort? We already covered that. Domenica, could you just eliminate duplicate questions? Because we got a lot of questions and I want to get through as many as I can. If you guys could do me a favor and upvote the questions that are in there so that and I'll do speed rounds here. Uh, Uh, Someone's asking, can you join Start Fund without being an alumni? You can, but Start Fund is right now mainly for people in VC Lab. If you go to the Start Fund website, which Domenica can paste in the chat, or just go to desselgroup.com and there's links to it, you can apply. We will do a call with you because we need to, we're kind of vetting external people. And we have an AMA on the Start Fund next week. So we will accept people outside of VC Lab, but it's mainly right now for VC Lab people. What are the fees involved in the Start Fund? So that's all available online. It's completely free to set up. And what happens is when money comes in, we take 1% out for a management fee and 1% out for operational costs. So it's a fixed 2 and 20 model. Most funds are not a fixed 2 and 20 model. They're 2 and 20, but you have fund expenses on top. This is 2 and 20 and there are no fund expenses. So it's probably the single best deal in venture for LPs. And you can read all about the model in detail on the webpage. And you can ask the AI questions about it as well. Have the funds from the earliest cohort performed after deploying their first fund? Yeah, lots of our funds are on fund. Our funds, as I said, were weighted in the top quartile and weighted in the top decile, but we're only 3 years old. So I talked with a major LP yesterday and we were just discussing. I'm like, if you say you're in the top quartile and top decile and you're only 3 years old, most LPs will laugh at you because it's like, that's too early to tell. So it's too early to tell. But I mean, they're performing really well. I mean, let me put it this way. Our fund of funds, which only invests in our companies, is at a 2. So we're 2xing. Like that's unheard of. It's 18 months old. Our 18, a little older, a little over, 20 months old. Our 20-month-old fund to fund is at a 2x. That's just unheard of. Unheard of. That might be that like that's incredible. I'm sure it's happened, but it's super rare because you have something called the J curve. All right, let's keep going. Does cohort 18 start on June 10th? Yeah, it starts. I don't know the exact date in front of me. It's on the website, but yes, I think it's June 4th, but it's in the early part of June. And maybe Domenica, you could answer that. Can folks from the US apply? Yeah, everyone. We have people. 35% of all applicants are in either the US or North America. For the Start Fund, the LPs need to be individuals? No, you can take any kind of LP for the Start Fund. The whole LP sign up process is fully automated. We are the first organization in history to fully automate the LP sign up. No one else does this, not AngelList, no one. Fully automate. We have team members from AngelList, team members from every Carta, whatever. We're the first people to fully automate the LP onboarding, which is pretty awesome. Now, I know we're running out of time here. Let me see how I'm doing. Maybe I can run a little bit over. I do have a call in a minute, but I can run a little bit over. Um, there's a question from a founder here. And look, I can't answer questions about founders because you mentioned PitchBook. The PitchBook data is uh, terrible. But the question was, what assurances do I have the data I enter into Decel Hub is private? So you can read our privacy policy. I recommend that you do. We're not in the data business. We're allowed to use the aggregate data. So if you have 100 LPs, we can say There are like 1,000 LPs, and actually there's 205,000 LPs in the system, but I digress. So we can look at summary data, right? Um, but we can't look at individual data. So we can't look at who an LP is, but we can look at how many LPs are in the system. And we're not in the business of this is like Carta and these guys are not legitimate. They're bad people, bad businesses doing bad things with people's data. That's not us. All right. We live in, and look, I'll be the first one to step down. If you think you want to call me out on something unethical I've done, please do. And you know, if I can't answer for it, I sign the Mensarius Oath. I will step down and leave the industry. Full stop. So we're not here to sell your data. We're not here to like steal your data, market to your LPs. Your LPs are your LPs. Um, and we can look at the aggregate. Um, is in the start fund, who is in the investment committee. We have a deals team here at Dessel Group. It's a small team. It's a very experienced guy and a two very experienced people, a very experienced person, and uh, someone that helps him. And the together they have tons of experience already. Have helped with thousands of deals, and they're acting as the IC. They're excellent. You would be lucky to have them. In fact, most managers we work with consider our deal review team to be one of the best assets that we offer. There's a bunch of questions here. So what I'm going to try to do is copy them. And if you guys want, you can post the Start Fund questions. There's a post on LinkedIn about Start Fund. We do have to wrap. So pop on LinkedIn, pop your Start Funding questions there. I will answer them. And then we have an AMA coming up. We have other events. I'm around. Don't be shy. This was really great. I love answering questions because at the end of the day, we're here to help you succeed. And I want to make sure you know everything you need to know so that you can go out and build a firm that's going to make the world a better place. All right, guys, thank you very much. Talk to everyone soon.